The stock market, at its core, is a marketplace where investors buy and sell shares of publicly traded companies. These shares, also known as stocks, represent ownership in the company. Think of it as owning a tiny piece of a larger business. The initial process involves companies issuing shares through an initial public offering, IPO, to raise capital. This is how companies fund their growth and expansion. Once these shares are available, they are traded on exchanges like the New York Stock Exchange, NYSE, or NASDAQ. These exchanges act as central hubs for buying and selling. The price of a stock is determined by supply and demand. If more people want to buy a stock than sell it, the price goes up, and vice versa. Conversely, if more people are selling, the price decreases. This constant fluctuation is what makes the market dynamic. Understanding this fundamental principle is crucial for anyone venturing into the world of stock market investing. Investors analyze various factors to make informed decisions. These factors include company performance, industry trends, and economic indicators. For example, strong earnings reports might drive up demand for a stock. Conversely, negative news could lead to a sell-off. Investing in the stock market carries both opportunities and risks. The potential for high returns attracts many investors. However, it's important to remember that stock prices can also decline. This means investors could lose money on their investments. Therefore, diversification is key to managing risk. Diversification involves spreading investments across different stocks, industries, and asset classes. By diversifying, investors can reduce the impact of any single investment performing poorly. Another important concept is long-term investing. The stock market can be volatile in the short term. However, historically, it has delivered strong returns over the long term. Therefore, many investors adopt a buy and hold strategy. This involves holding stocks for several years, or even decades. This allows them to ride out short-term fluctuations and benefit from long-term growth. Furthermore, understanding different investment strategies is crucial. Some investors prefer value investing, which involves buying undervalued stocks. Others prefer growth investing, which focuses on companies with high growth potential. Technical analysis is another approach, which uses charts and patterns to predict future stock prices. Ultimately, the best investment strategy depends on an individual's goals, risk tolerance, and time horizon. It's also important to stay informed about market news and events. This includes following economic reports, company announcements, and political developments. Staying informed can help investors make more informed decisions and adjust their portfolios accordingly. Moreover, seeking professional advice is often beneficial. Financial advisors can provide personalized guidance and help investors develop a comprehensive investment plan. They can also help investors navigate complex financial issues and make informed decisions about their investments. In conclusion, the stock market is a complex but potentially rewarding arena. Understanding its fundamentals, managing risk, and staying informed are essential for success. Whether you're a seasoned investor or just starting out, continuous learning and adaptation are key. By taking a disciplined and informed approach, investors can increase their chances of achieving their financial goals. Remember, investing involves risk, and it's important to invest responsibly. Consider consulting with a financial advisor to tailor a strategy that aligns with your specific circumstances and objectives. With a foundational understanding of how the stock market functions, the next step involves active participation. This means putting your knowledge into practice and making real investment decisions. Investing in the stock market involves risk, but it also offers the potential for significant returns. It's a balancing act between potential gains and the possibility of losses. Investors analyze various factors, including company performance, economic indicators, and industry trends, to make informed decisions about which stocks to buy or sell. This analysis can range from simple observation to complex financial modeling. Diversification, spreading investments across different stocks and asset classes, is a key strategy to mitigate risk. It's about not putting all your eggs in one basket. Imagine a garden. Planting only one type of seed is far riskier than planting many. If disease strikes the single crop, everything is lost. But with diverse plants, some will survive and thrive. Over time, the stock market has historically provided higher returns than other investment options, like bonds or savings accounts. But it's essential to remember that past performance is not indicative of future results. The market is constantly changing, and what worked in the past may not work in the future. Consider the story of two investors. One who panics and sells during market downturns, driven by fear and short-term thinking, and another who remains patient and holds their investments, believing in the long-term value and potential for recovery. Historically, the patient investor is more likely to see long-term gains. Market fluctuations are normal, and reacting emotionally can be detrimental. However, this requires a strong stomach and a belief in the long-term potential. It's about having the conviction to stay the course even when things get tough. Successful stock market participation requires patience, discipline, and a willingness to continuously learn and adapt to changing market conditions. The learning process never truly ends. Think of the market as a constantly evolving puzzle. New pieces are constantly being added, and the picture is always shifting. What worked last year might not work this year. Staying informed through continuous research and analysis is paramount. This includes reading financial news, analyzing company reports, and understanding economic trends. For example, understanding the impact of new technologies or regulatory changes can provide a significant edge. Being ahead of the curve can lead to better investment opportunities. Furthermore, emotional control is crucial. The market can be volatile, and fear or greed can lead to poor decisions. It's important to stay calm and rational, even when the market is turbulent. A disciplined approach, based on a well-thought-out investment strategy, is essential to navigate these challenges. Having a plan and sticking to it, even when emotions run high, is key. This strategy should be based on your individual risk tolerance, financial goals, and time horizon. Ultimately, successful investing is a marathon, not a sprint. It's about building wealth over time through consistent effort and smart decisions. It requires a long-term perspective, a commitment to continuous learning, and the discipline to stick to a well-defined plan. This plan should be regularly reviewed and adjusted as needed. By understanding these principles, investors can increase their chances of achieving their financial goals. Whether it's retirement, a down payment on a house, or simply financial security. Remember, knowledge is power, and in the stock market, informed decisions are the key to success. The more you know, the better equipped you will be to navigate the complexities of the market. Don't be afraid to seek advice from financial professionals. They can provide valuable guidance and help you develop a personalized investment strategy. Start small and gradually increase your investments as you become more comfortable. This allows you to learn and grow without taking on excessive risk. Consider using a brokerage account that offers educational resources and tools. These resources can help you learn about different investment options and track your portfolio's performance. Stay patient and avoid making impulsive decisions based on short-term market fluctuations. Focus on the long term, and remember that investing is a journey, not a destination. Regularly review your portfolio and make adjustments as needed to stay on track. This ensures that your investments continue to align with your goals and risk tolerance. Don't be afraid to ask questions and seek clarification when you don't understand something. Investing can be complex, and it's important to have a clear understanding of what you're doing. With the right knowledge, discipline, and patience, you can achieve your financial goals through stock market investing.